Good morning, everyone. Welcome to the morning call. I'm Laz, filling in for Scott today, who is out. What a week it's been. It's been a week defined by volatility, choppiness, non-commitment, lack of commitment, and it's been just a turbulent week. We've seen bullish days, bearish days, buyers, sellers, and it's just been an utter tug of war. The theme for the week in a lot of the morning calls and midday updates that we've done has been less is more. And, in this type of tape where it's very headline driven and any news out of Europe or Greece or, anything overseas can really generate a quick, impulsive, market move, it's very hard to put on, risk for more than just a day trade at this point. We have big news that's going to happen, out of Europe on Sunday with the election. And I think many traders and many market analysts and talking heads are, going to go out and say that to expect a huge move in the market come Sunday night or Monday morning, and that very well may be true. But as a trader, and again, this is something that I teach, to all the students in the Active Trader program, if you can't quantify the risk, or you're just hoping that something happens, that's not a trade. That's not something you want to position yourself into. Now there's a way to trade with defined risk, and that's what options are for, and things like that. But the point is that if you're hoping for a headline, or you're just sort of throwing a dart against the wall, that's not really that's not a sound strategy for money making, and not something that I personally believe in or teach others to do. So let's take a look at the S&Ps and let's talk about the possible scenarios, the what ifs. So we have here the S&P. This is the daily. Going back through basically October of last year, this is the the market rally that we saw from November, December, into March, April, where we peaked. We broke that trend line. We retested. Couple of highs up here were made. You can see a couple attempts to break through that 1400 mark, and then we basically had 6 weeks of pretty aggressive selling, bringing us back into some sort of fib retracement here. Just the question is this a pullback? That we're going to see new highs again, roughly just about 50%, just shy of that 50% mark. Is the correction over, or are we going to, are we setting up for more downside? Or are we setting up for maybe another climb back higher? So, that's where I think we're at. It's the could go higher, could go lower. Let's evaluate the shorter term here now. So if I zoom in here in the S&Ps, you're going to see that, we've hit a resistance point around 1330, 1335 in the S&Ps. We tagged it yesterday and, on the news and sort of came off a little bit. But, it's hovering here with trying to break this shorter term resistance mark. If we can get above there, and that very well may happen, Monday morning on a gap up, there could be some room to climb higher. The next level would be, somewhere in here, into this 1360 area in the S&P. So we have to evaluate it, unfortunately, right now on a day-by-day basis. I don't suspect on this Friday, going into what could be a very headline-driven weekend, that a lot of traders are going to be willing to take a stand, and the market's going to, break out with good volume, or break down, for that matter, on good volume. I suspect that we're going to stay in this 5-day range that we've been in. Again, this is really has defined the week. Red, green, red, green, red, green. A lot of sideways movement, not much direction. I think the best trade, if you're looking to trade this type of market, is just trade the range, play the extremes. You want to buy at support and sell at resistance. Looking at a smaller time frame, here's more of an intraday look. You can see that 134. Well, let's look at the spiders, I guess. Really more of the trading vehicle here. The SPYs, that 134 area, you can see failure here. Well, that was Monday. And then yesterday on that, end of day news that the central bank would support, we saw that real quick spike up to 134 that, was pushed back down. So, at this point, I think I'm gonna keep reiterating the same thing. Less is more. It is a day trader tape only right now. So if you are not somebody that's looking for that intraday, short-term gains, this is not the tape for you. let's step aside. Let's wait for, next week to evolve. Let the story sort of set itself up. And I think that that's the best strategy, the best approach right now. Good traders, successful traders, traders that have longevity in this market understand when it's time to commit capital, when it's time to, the cash is the position. And for a lot of traders that are not, scalping day traders or really living in the smaller time frames, this is that time, in my opinion. Let's take a look at some symbols, some trading stocks. We'll start with Apple. And Apple's really gone into a flat line type of trade here. There's really not a whole lot of commitment or conviction. Tuesday we saw some selling, gapped up into like 585, sold off back to the averages. And again, when you have a flat 21, it's a trendless market, and it's going to be very, very tough to generate, a directional move from this. Now, at some point, there will be a trade here. I think a lot of traders, myself included, are looking at, smaller time frames here. There is definitely a little bit of a head and shoulders pattern developing in here. You can see the, the head, the right shoulder, the left shoulder. So there could be some resolve here, and if this does play itself out, and this would essentially be, a break of support around 567, 568, you could see a larger move to the downside, which could jar the stock loose. And again, on the flip side, if we were to trade back above this 578, 579 area, that could spark another move to the upside. So it is a little bit of, if this, then this, or if that, then that. So have your plan in place and be very tactical in your approach, and that's, ultimately how you're going to succeed in a tape like this. If we look at some of the banks, we'll look at Morgan Stanley. We talked about Morgan Stanley yesterday in the recap. Setting up for what could be, a cash flow, quick trade to the upside. We saw a low made. We saw that, quick spike off the low. And we've been basing this as a catch play, rising 8 here, holding that 8. This could produce one more, strong surge to the upside for a trade, possibly back into that $15 mark. So keep an eye on Morgan Stanley and some of the other banks. Bank of America also, setting up to some degree in that fashion. So we'll see. Again, I don't recommend the banks right now for anything more than just a 1 to 2 day trade potentially, as it could, could be, living in here or developing in here. That's really it at this point. There's not many stocks that you can go to, for extended moves. From the long side, another stock that looks decent is Allstate. Again, probably not on everybody's radar, but, decent chart pattern, definitive resistance up here just below 35. Keep an eye on a breakout through that level with good volume. Those trades, those select trades have been working decently. We saw some good moves in some of the dollar stores. FDO, we talked about earlier in the week. You can see FDO gapping up yesterday into 75, tailing down. Short term probably needs to pull back or rest up here. But this is a nice looking chart. And again, with more time and a base building, you could see higher prices here. Dollar General, again, good strong chart pattern. Dollar Tree, DLTR, again, just a couple of names in this sector. Dollar Tree looks like, it's trying to leg higher. This is a good looking chart. Stocks making 52-week highs in a, pretty violent and volatile market. Expedia, another one that we've mentioned a few times in some previous calls. Again, it's going to be very hard for stocks to, really thrust to the upside if the market's not really behind it. If the market's, selling off, it's going to be hard for the longs to really get going. But, again, have a good watch list. If the market does start to try to, break to the upside, you want to have your go-to stocks where money flow is to the long side. So a couple of just, trade ideas there, or watch list stocks for those of you looking for some longs. Let's go to the other side of the coin. Let's look at Google. Google really has been, a very, very weak stock. Really not any buyers in sight here. Undercutting these prior lows back here. And just really no buyers in sight. That's not to say we can't see a quick, 2 or 3 day snapback as, our 21 day is up here and the stock is down here. So we could have a little mean reversion here, but, this is not a place where money flow is. And I suspect in time, we could see a trade back down to, lower levels into this 520 mark in Google. So, down in this range. So keep an eye on that, if you're looking for stocks that, on the sell side or the short. Visa has another interesting looking pattern. Again, Visa's held up very well in the market, so it's got a little bit of relative strength, but, it's got a big, rounding top pattern potentially developing here. Now the key will be, a heavy volume break of support, which is down around one down here, which is right around 111. So I'm keeping an eye on that, as that could produce a nice tradable event to the downside. Whole Foods, again, just sort of looking at a couple of stocks that I think have trades developing. Whole Foods, another strong stock with a nice uptrend intact. 92 has been the level. Trying to flirt with breaking above 92, so keep an eye on a heavy volume push in Whole Foods above 92. But you can see, a whole week here of basing. 2 days ago, we saw a big down move, but again, snapping right back and back to highs. So there's definitely a bid in this stock, and I'd keep an eye on that for a breakout. So just a couple of ideas out there. And yesterday I talked about Chipotle, another trade that I am watching to the downside. A little bit of a descending channel, and I don't really see too many buyers in here, but that being said, it hasn't really broken down. And if it does, if it really clears this area, this 395 area, and volume picks up, you could see a trade down into the lower end of this descending channel. So keep an eye out there for a trade. Again, this is really more for probably the swing traders, someone looking to commit capital for a few days at a time, that can handle the risk of a high beta name like Chipotle. Priceline, another high beta. Just sort of volatile in here. Hard to say what it's going to do. Looks like, we took out support. This was this gap support down here. It's typical for a stock to undercut support, snap back, and then begin a larger down move. So we still have this open gap down here, and then you have a larger area of support, which is really the level that the stock broke out from, down around 550. So a couple of names that we're keeping an eye on for some potential downside that I've been watching the last few days. Just not a lot of buyers in there, not a lot of enthusiasm. So be nimble, in this market. Pick and choose your spots wisely. I'll say it again. I'll probably say it again this afternoon in my midday update. Less is more. And that's fine. Reiterate the same point. There's a reason we keep reiterating the same points. Profitability as a trader is all about consistency. And consistency becomes a little tougher in a market where you don't have direction, or one day changes to the next. Yesterday was strong, today was weak, tomorrow is strong. It makes getting the feel of the market or specific stocks a little bit more challenging. So, tread lightly. Don't look to put on tons of risk, especially into this weekend, as it's, we're expecting to be very headline driven. Let's evaluate come Monday morning. Look for tradable opportunities and trade them well. Plan Trader's a profitable trader. I'm Laz, and I'll talk to you later.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.